Welcome to my channel. This is Feka FS Trade. In this video, I'll be showing you how I was able to capture and catch this wonderful trade that is running a massive profit right now. The strategy I use, the psychology I employed here, and how I was able to dodge all the setup, all the traps set up by the market makers in this trade. In this particular week. There's a lot of manipulations, but I was able to dodge them. I will show you how I was able to dodge them in this video. If this is the first time you are coming across my channel, kindly subscribe, comment, like, and share to your friends also, because I believe the information I'm giving here has a lot to impart in the life of a forex trader in this field, most especially the beginners in this field. Then let's go straight into how I was able to capture trade on this week. On Friday, I made this trade on Friday. The market closed on Friday at this place. Then on my weekend, I look at the market. I was like, okay, what's happened here? Where will be my next entry? Since this first entry has been used, this first entry has been used, you can see it. The market has tested it and has reacted on it. You can see it. This zone has been tested by the market, and the market managed to come up to here. Then I was asking myself, will this point of interest hold, or is this thing just a trap? I said, okay, let me employ the knowledge I have in this field on market structure. Most of all, the knowledge I have on market structure, I look at it. I said, okay, this is a reversal pattern, which we know as head and shoulder pattern, and this market is trying to retest to continue selling. Then I check for possible valid POI. This is only POI here that is valid, and you can see that market has reacted on it. Market tested it and move up to here and continue selling. I say, okay, this market, there is nothing here anymore that is going to push this market up. So I map it out as an inducement point that some newbies must have, placed their entry in any place and put their stop loss here. This is actually where they will put their stop loss. So I map it out. I name it inducement because they have tried to induce people to buy where they are not meant to buy. So that is what they call inducement. So they have induced people that bought here and put their stop loss here. So the market will actually come and sweep them. I say, okay, where next will this market react? I start looking at, I say, okay, see another point of interest, that this is another valid point of interest. I map it out. I map it out as my next key zone. Another key level I will be looking at. Not actually a place I will be placing my entry, but a place I will be watching closely when market reach at that point, that I need to look closely on that point to know if market will give a change of calata. If it doesn't give a change of calata, I will know that this key level is not going to hold. But if it gave me a change of character, I will say, okay, that this market, that this key level will actually hold, that it is valid. So what am I expecting if this market come at this zone? I'm just expecting something like this, something most of us know, a reversal chart pattern we know. I'll be looking out to see markets to come down to a point like this. I'm waiting for a market to come down like this, then move up again. Then I'll be waiting for a sweep of liquidity of that first touch the market made on that key level. I'll be expecting the market to sweep it out, to sweep the early buyers out. Then I will wait for the market to react, to reverse immediately, to cause a change of character. Once I see something like this, I will now know that this market has changed character and this key level is valid. So I'll be waiting to enter the market along this zone, any place at this zone, targeting to the next breakout structure, which is this one. Let me mark it out. The next breakout structure will be targeting. This is the next breakout structure. The next target will be targeting. So this is how I structured it. I build a system because first of all, you need to build a system. I build a system, which is one, the market will come here. I will look for this. If I didn't see this, I'm not going to take any trade. I will know that this week has gone. I didn't take any trade, or I will start finding for another thing again. So I have drafted what I wanted to see in the market before I will enter the market. That is the psychology only. Then I also see a liquidity point here that is validating this key level. So I mapped it out. I was patiently waiting as I mapped it out to see the market to sweep it. To see the market to sweep it. Then the day keep on going. I keep on observing. I keep on observing till the market touched on it at this zone. You can see at this zone, this market has tapped into the key level. Let me extend this so that you will see how the market tapped into it. You can see it. So when this market has tapped into here, I was like, okay, that this market is actually doing what I'm expecting that the market will do, which is to give me a sweep, which is the first one. I said that I must see the early buyers being sweep out, and this is where the early buyers will put their stop loss. All the people that bought early, they put their stop loss at this zone. So I saw it that they have been swept out. I said, okay, where is the point that caused that sweep? I said, okay, this is the point that caused that sweep. So okay, I will wait for the market to come above here. I will wait for the market to close above here with a body of candlestick, not a sweep, with a body of candlestick. Once I see a body of candlestick closing above here, that I will start looking for buy option. Then I keep on watching the market patiently. I saw the market coming down. I still didn't execute any trade because I know that this is not a change of character. It's just a sweep. Because the body of the candlestick does not close above my change of character line. Let me elaborate so that you will know that that zone is a change of character. So this place is a change of character. So I'll be waiting for market to close above here. Once market close above here with body of a candlestick, I will know that the market has changed color. So I keep on waiting patiently. The market keep on manipulating, keep on sweeping people out, keep on doing whatever it is doing. I keep on extending my line. I keep on extending my line, waiting for a market to close above this line with a body of a candlestick, not a sweep, not with a wick, with a body of a candlestick. So I keep on waiting. I keep on waiting to see that. I keep on waiting. You can see that the market has not actually closed above it at this zone. It does not actually close above it at this zone. It just sweep it out and for the second time I keep on waiting, even though I saw something that looked like a positive point of interest here. But I keep on waiting. I didn't take the trade. I didn't enter the trade. I keep on waiting patiently, keep on waiting. Before I saw this one, then when I see this one, I say that okay, the market has actually and has eventually caused a change of character. You can see it. There's a full change of character at that zone. So I just patiently waited. You can see all time it took me from here. I keep on waiting. My network. I keep on waiting from here down to here. Even here, when I have seen that the market is tapping on my change of character, I keep on waiting till I saw this. This validated to me that wow, there is the market has changed character. And if you can see, there's another block here, which is a very, very nice point of interest. It's a very, very nice point of interest. I saw it. I said, okay, that this market is going to react on this zone or maybe any possible place. Even here, market can just tap into here and keep going. So I just say, okay, I will first of all mark out my protected low, like the protected area that I will set my stop loss so that the market will not reach there. I marked out this point. There's nothing that will make the market to come below here. If you come below there, we know that the market makers are just trying to be purely wicked. They're just trying to be purely wicked. So I keep on waiting. Then I place my entry. I mark my POI on this spot. I mark my POI on this spot. Then extending it down to here because I know that this market will not actually come low to this zone. It will not actually come too low to this zone. Then I put my buy option on that POI, which is at this place. I put my buy option on that POI. I adjusted my stop loss below here. Then my take profit above here. That point I told you that the market is going to go and sweep. It is actually where I position my TP because I know that the market has reversed. That the next thing to do is to move to this point and cause another new break of structure. So I position my TP over there. Then my TP1 comes in this first valid point of interest. I will explain to you why this point of interest will not does not hold and why it will not hold. I will explain to you on that. Then when I place my entry, what do you see? The market just tap into it and move. It's almost close to the to the TP, which I know that on Monday, on Sunday, on market open, the market will finish the job. Then we'll be hitting 150 pips profit. It's a very, very nice profit on my own ends. Then I said I will tell you why this point of interest does not hold. The reason why this point of interest does not hold is because it's not because it's not valid, it is valid because it has all the characteristic of a valid POI. It met all the criteria of a valid POI. One, you can see that it caused a break of structure at this point. At this point, it caused a break of structure. Then at this point, this is a liquidity point. Then all these things are engineered liquidity. All these things are done in the market so that the retail traders and those that does not understand how the market flow, or those that doesn't understand the market structure, we feel like the market will retest to this POI and continue selling. But if you understood the market structure, you will know that this market is just retracing to the buy zone, which is this zone. This is actually a buy zone, so that it will pick a new order to move up to break another structure, because this market is typically an uptrend. So you can see that they just try to fix this POI here and also fix another POI here. And we just say that they are fixed to order to induce you again. So these things are just an inducement POI. I used to call them inducement POI. They were just placed there so that you will feel like they are going to hold market, but they will sweep you out whenever they reach there, because they are against the structures. Like they are just fixed against the structure, even though they are valid, but they are against the trend of the market. So you can see the market just entered here, accumulates, manipulates. This is a manipulation, then it's distributed. In my coming videos, I will take my time to explain market structure well to most of you that are watching my video. I will explain to you so that you understand what is market structure and how to read the market structure. If you don't understand what market structure is, there's no way you are going to make it in this field, because market structure is like the story the market tells. If you can be able to read the story the market is telling, you can be able to react, not to predict. You don't predict market, you react according to what the market is saying. People predict. When you predict, say that market will buy from here, market might reach there, sweep you out before it buy, or market might reach there, it will not even respect that point. That means that you are just predicting, you are not reacting. But if you are reacting to what market is doing, you must be able to have a well knowledge of market structure, what the market is saying, because what the market is saying is being expressed in the structure the market is making. You can see how I mapped out this place as an inducement, because I knew that this market is still going, heading to the demand zone to buy from there up again. You can see how I did not take a sell on these 2 points, because I know that these 2 points are not valid in the structure. Yeah, are just invalidated based on the structure of the market and the trend of the market, not because they don't meet the criteria of a valid POI. They met the criteria, because one, a valid POI must break a structure and they must have a liquidity before it, also with a fair value gap, and also the other block there is also a valid other block. But the market does not respect each of them, because they are just set there as an inducement point of interest. So in my subsequent video, I will be talking about more of market structure. I will do video on market structure. So try to turn on your notification button so that you will know when I drop this video, so that you can learn from that video and also improve yourself more and more in this field. The field is all about learning, learning, learning. You cannot stop learning in this field unless you have decided I'm not trading again. But once you have decided that I will keep on trading, you need to keep on learning, learning every blessed day, or you make it weekends. Every weekend you must learn new thing. That's why I always used to post my videos on weekends, so that after the whole trading week days, you will relax on weekend, review yourself, then find an insightful videos on YouTube and watch. Then or you come to my channel and you will see what I have explained, and also what is going to happen next week. I'm still going to drop another video on what is going to happen next week, on the trade we will be taking next week. I will still drop that video. So try to subscribe, share to your friends, like, comment, turn on your notification button so that you will not miss out.